What's up everyone? Welcome to my channel Redwood North Trading. My name is Eric. If you're new here, just let me get it up front that I am not a professional investor. I'm not licensed in any way, shape, or form. I'm simply an avid trader and I follow the stock market on a daily basis. First chart we're going to look at here is the ES1 mini futures for the S&P 500. This red line here is the 200-day moving average. And then I've drawn in two trend lines here, and this line here I refer to the moat, or the mother of all trends, because if you go back and follow this line, the price action doesn't get terribly far away. You know, you get big spikes down like this is the COVID crash, but then it slowly works its way back, right? And then in the peak of the 2000 and 2008 bubbles, it gets pretty high up here and then crashes back. Basically, the moat is like a long-term average of the entire length of the ticker. So the ES1 mini futures goes back to roughly the year 2000, give or take. And this line is the moat line for this ticker. And then this line here is simply drawn from a couple points here. It's been acting as resistance for the last, couple months now? Several months, since November. You know, price action keeps working its way up and rejecting and rejecting, 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 rejecting. And then here we are today, we're right down in here. Now the question is, are we going to retest the moat line down here like we did right here, 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 and then it got stuck right in here for a long time. So are we going to retest that? It's hard to say. However, with this selling off here the last, 5, 6, 7 days, today is the first time that the futures have actually closed higher, and they're actually up a fair amount. Right now it says about 1.32% for the day. So again, it's kind of hard to say. Long-term projections have the S&P hitting at least 4,000 here in the next, month or so. And then we'll see maybe a bigger correction, maybe back down to this moat line again. And then based on Elliott wave and other projections, lots of people are calling for the S&P to go to like 44 or 4,500 even this year in 2021. So we'll see. This little sell-off and now starting to go higher again here, it could be something like this, right? It kind of sold off here for about a week and then it pushed back up and then it finally fell down bigger. If we zoom in here real quick, this sell-off here was 5.25%, and now this recent sell-off here has only been 3.9%. So in the grand scheme of things, my 2 cents is this is a healthy pushback in the overall uptrend, and we're at least going to hit roughly 4,000 before we see a bigger correction. All right, I got 4 other tickers I'm going to cover today. The first one here is going to be Apple. And I have the Elliott wave drawn out here, and this is starting back in the COVID low, and it peaked out wave 5 here at right around 145, and now we are currently in an ABC correction is what I'm somewhat predicting here. And commonly, if you draw out the fib here, come down 0, A, B, commonly we come to the 1 where C equals 1 of A, right? And so that's right in here. We were getting hung up right there. However, we did yesterday have this huge wick come down here, and that's about maybe 1.25. So if this fails here, it could come all the way down here to commonly the 1.618 level, which would be 113.80 cents. With that being said, this could be the bottom of C right here, where we just had the wick of this day crash through the 100% level here, and then we could just hover here for a while and then start heading higher. With that being said, we definitely could come lower down here to the 115, 113 range. The MACD is still going down, and then the RSI has not quite bottomed out yet in an oversold fashion. So it's a little bit of a wait and see game here. I did get in here selling a put, as I am okay with that kind of risk here. So once Apple bottoms out here, whether it's here or if it comes farther down here, Elliott wave then has this going higher up into about the 150 range, or even as high as 180 later in 2021. Now that's obviously assuming that this is an ABC correction, and I guess you can apply this to all the tickers we're about to look at, because if this breaks on down farther, this would then turn into a 1, 2, 3, 4, 5 wave down, right? So assuming this bounces here at ABC and then heads higher, that next high point is anywhere from the 150 to 180 range on Elliott wave. All right, the next ticker here is Tesla, because everybody loves to trade Tesla, right? Tesla's in a somewhat similar boat as Apple. It depends if you want to count this little tick down here as A, and then this is B, and then this could be C already, and then we're going to head higher, which that could match up. You have the MACD seemingly weakening here. The RSI nearly hit oversold, yesterday. So if we draw in the fib lines here, and we go 0, A, B, like I have projected here, somewhere in there, C could be way down here where 100% equals 475. However, these corrections, they're always fluid, right? Like nothing's for sure, obviously, with anything, whether it's Elliott wave or the MACD or the RSI. You always have to take technical analysis with a huge grain of salt. All these things could stack up saying one thing, and then they could all be wrong, and Tesla could just crash down to zero, right? My 2 cents is that this is the A wave here and not just this little hiccup here. Now, if we do go back to this little hiccup and call that A, and then we call the peak here B, this A is already beyond the 1.618 wave, right? I mean, you're pushing like 2.0 down here. And maybe that is it, And then this could be C right here, and then now we're heading higher. However, Tesla, similar to Apple, has not tested the 200-day moving average here, which is this red line, since the COVID crash, I believe, on the 1-day chart. So my 2 cents is that this indeed is going to go lower here, and C is going to end up somewhere down there. This is going to be A, B, C, somewhere down here around 500 bucks. It depends how high this B goes, right? If this was the peak of B and then it keeps going, 100% equals 463 way down here. But again, MACD is weakening, so is the RSI and the downtrend, and it's seemingly about to start turning up. I personally am not in Tesla right now, so take that for what it's worth. All right, next ticker here is PTON. This one I am in, and this one I have drawn out here. We had the wave 5 high from the COVID crash back here. We had an ABC correction, and now we're going up to 1. And then 2, and it just depends here if 2 is already done or if 2 is going to continue lower down here to like 105. However, you could draw this in here as an ABC correction starting 0, A, B, and then C. It's in between here at nearly the 1.618, and these levels are here right at the 100%. This one has a little stronger momentum going down on the MACD, and then the RSI hasn't quite bottomed out to oversold yet. So that would leave me to believe that we are headed towards the 1618 line here, and that would put us down here at about $105, $106. That being said, I've already sold a put. Can't remember offhand what exactly. I think is 110-ish, give or take. I sold that one for April, so that gives me like upwards of 2 months for it to stay above 110, and I would get paid on that put that I sold. At this point, I'd say you're left with 2 scenarios. Either this is the bottom of 2 right here, and this is going to start higher now for wave 3, and then inside the wave 3 you would have a 1, 2, 3, 4, 5, right? Or this is not the bottom of the ABC correction here, and it's going to bottom out somewhere down here at around $105, $106. And last but not least is First Solar. If you're looking to get into a position right now, I'd say First Solar is probably the best one out of all these. As you can see, this is the top of wave 5 that I've calculated here, and then we're in an ABC correction. And if you draw the fibs on here, come down to A and B, and look at that. This candle nearly hits the 1.618 almost exactly. Does that mean we can't go any lower? No, of course not. We could easily go lower. We could come way down here, However, with these ABC corrections, it's very common for wave C to equal wave A at 100%, which clearly it has gone past that. Even though we keep closing right around the 100% line here. This closed down here, this closed slightly higher, and then today we closed almost right on that to the penny. So the 1 or the 100% level is very common for the ABC, and then also it's very common where wave C equals 1.618 of wave A, right? So that would put it down here. And again, we've almost hit that almost exactly. And then the MACD here is weakening in negative territory, which is a good sign if you want the stock to go up. And then same with the RSI, didn't quite hit the oversold there, but it's close enough. And it's starting to kind of head back into a neutral area as well. My 2 cents here is that, we're probably not going to go much lower than this. It might get stuck in this range here for a while. Could just move sideways. Could bounce between, $77 and $87 here for a while, and then finally head higher. Long-term projections have First Solar here up at around $105 in the next 12 months. And this sort of correction here, this is the wave 5 from the COVID crash low. And then this sort of correction is a very healthy correction, at least according to Elliott wave. And then you could see, 1, 2, 3, 4, 5 coming up here to 105, just like a lot of people have predicted. And I guess one last note, I personally have gotten into First Solar here. I think I sold a pretty aggressive put, about 85, somewhere in here, again for the April expiration. So I've got, a month and a half, give or take, for this price to stay above $85. And if that happens, then my short put will pan out and pay me money. All right, I think that covers just about everything for today. Let me know if you have any question in the comments below. Other than that, thanks for tuning in, and I'll see you in the next video.